All right, welcome everybody to this week's client support webinar. My name is Bennett McDowell with TradersCoach.com. Great to be here. And we got a full room today. A lot of people still coming in. So I was giving it a little bit of an extra time to get everybody in here. So welcome everybody. Hope you're having a good summer. Today, of course, is July 31st, 2024, last day of July. All right, a couple things. Quick announcement here is don't forget next week, August 7th. So starting next Wednesday, the client support is shifting to the afternoon. So the client support will be at 3 p.m. Pacific time. All right, so please make a note of that. So we're shifting it to the afternoon. I'm kind of busy during the mornings doing a lot of prop trading these days. So I need to have those mornings pretty open at this point. So we're just going to shift some of these webinars to the afternoon. So please make a note of that. We're going to start next Wednesday, and you'll get an email from us too as well. Also too, once a month, we do a free market review on YouTube, and that's going to be in the afternoon on the first Wednesday of each month, and that'll be 4:30. So next Wednesday, that'll be at 4:30 p.m. Pacific time as well. So those are two of the big announcements. All right, let me go through the usual suspects here, which includes our risk disclaimer. Like I always say, without risk, you should be able to repeat this now on your own. There is no opportunity, right? I think that's a great saying because it's very true. All right, and it's not just for trading, it's pretty much everything we do in life, so to speak. All right, but the thing is with risk is you kind of want to know what it is, and that way you can protect yourself. You know, if the famous line that Warren Buffett uses, if you're in a poker game or you're in a situation and you don't know who the pansy is, chances are it's you, right? So you want to know, you want to be aware of the risk. Really important to know that. And there are ways in which we can protect ourselves, but in the markets, you cannot totally eliminate the risk. You just can't, okay? We work in a realm of probability, so some trades are going to work, others are not. We're going to talk about that in our session today, because of course you want to have an edge in the market, and that's first and foremost. And the edge includes a lot of elements, which I call the trading pie, so to speak. All right, so keep that in mind. There's, market risk events that can hit you, and a market risk event is one where, let's say you're, long the market, you got your stop set at a very appropriate level. So if you get stopped out, you're not going to lose a lot, and then all of a sudden war breaks out or something goes wrong or whatever, the lights go out, whatever, and the market gaps past your carefully chosen stop, and all of a sudden you're looking at a risk you didn't plan for, right? A much larger loss. And so you get out at that larger loss because you probably had a stop market order, which would have taken you out. And you're sitting there going, oh darn, I lost a lot more money than I anticipated. Well, here's the way, basically, the only way you can protect yourself against that is by funding your trading account with risk capital. Many traders that I know, they're professional traders, and I do this myself, okay? I don't trade with my entire net worth because of market risk events that could happen. So I'm very careful, all right, about trading with money I can afford to risk. And that, believe me, takes a lot of stress right out of trading, right? The other way you can do that, if you love to day trade, is do it with prop firms. I can talk a little bit about that later as well. But prop firms, what they do is they basically create an evaluation account. Once you get funded, then you get to keep like 90% of the profits from trading. And there are rules you need to know, but there are rules that if you're a good trader, it won't be too tough, okay? So just keep that in mind, all right? So we'll talk a little bit more about that. We're also going to talk about putting together some type of situation on a trading plan, so to speak. All right, so now the other way you can protect yourself on every trade is by placing a stop when you take a trade, but also too by knowing how many contracts or shares you should be trading. And of course, that's your trade size, right? Also known in the industry as your position size. So when your stops are further away, your position size decreases to account for that additional amount of risk. So the idea is you want your percentage risk on every trade to remain no more are constant to about a 2% amount. And that way, if you have an entry close to your stop, you can increase your trade size, but when it's further away, you decrease it. But every time you get stopped out, you only lose 2% of your account value. And that's what the trade size calculator is all about. And then we throw in the realm of risk to reward. In other words, where's my profit? What's my win percentages? And what does my profit need to be in order to make me profitable, to give me an edge? And that's where the risk to reward calculator comes in, where you can actually put in your target and see what the risk to reward on that one trade would be, along with any profits you're going to get. So those things are very important to take into account. And if you are, there's different styles of trading. If you're a high velocity scalper, all right, where you're going in and out of the markets, you're using a whole bunch of array of analysis to do that. You're using, VWAP, you're using volume profile, you're using art reversals, you're maybe using candlestick patterns, whatever. Okay, but the idea is that if you're doing that kind of trading and you find that your win percentages are higher with scalping than trend trading, then that means you can take profits more quickly and still do well. However, if you don't have an edge, then you're at a loss as well. So keep that certainly in mind. And then finally, of course, past performance doesn't guarantee future performance. I think by now we all realize that. All right, so I'm going to run up a little bit of info on the prop trading thing. I don't want to beat this to death, and I don't want it to sound like a commercial or anything, but it is a fantastic way to get your situation squared away for day trading. This is not for position trading. This is not for stocks. This is purely for the futures market. And the reason for that is the futures market gives you the kind of leverage you need to do it. And the ones I really, in terms of scalping, focus on would be the NASDAQ and the E-mini. And the first couple hours of the day tend to be really good in terms of enough movement in those markets to give you some decent opportunities based on your edge. Okay, so great thing to get your feet wet with it, so to speak. When you do a prop account, what you do is you basically sign up and you have a monthly subscription on what they call the evaluation account. And I recommend Apex because it's been around the longest. I've used this the longest. But the idea behind the subscription fee is it renews each and every month. And I put a code up there in the chat area where you can get a reduction in the price by quite a bit, like 80% or something. So you might want to check that out if you want to get involved in this. But the nice thing is that none of your own money's at risk. And during the evaluation account, the only fee you're going to have is a subscription fee. Now, the data is free, okay, so that's not a problem. They give you free market data, and it's good data, nothing wrong with it. I use it every day for the most part. But it gives you a way to start practicing without huge financial loss while you're developing your approach, and I love that. Now, they do have some rules to abide by, but all those rules are kind of going to be guaranteed to make you a better trader. All right, so keep that in mind. And this is probably predominantly for scalping. If you go for the larger accounts, and I got a couple of those, you can do your trend trading using the ART system with that, but don't do it on a small account. Scalp for the small accounts, like the 50,000, and use the 250,000 and above accounts for the trend trading. And Apex has all that. So kind of a cool way of doing it. And then once you pass the evaluation account, in other words, you're profitable, you make X number of dollars, meet the requirements, and that's all on the website, then they will fund you. And then you get to keep 90% of everything you make. And the first 25,000 is 100%. So again, not a bad way to get involved with this. And then you can multiply your earnings over 20 accounts because they have trade copiers, and that's where you make the big money. And they do big payouts. So I just like to run that by you because I think it's a great way when we talk about risk control to basically, for those of you that are short on funds and really can't day trade, this is a great way of doing it. And for those of you that have a lot of money, okay, this is not a bad way of doing it either, because you're not risking your own funds. So just kind of, keep that in mind, so to speak. All right, a couple books. I'm really excited. I finished my Art of Trading 2nd edition book. So that is coming out this year. All right, it's in the hands of the publisher now, and you can pre-order that. I'll, put some links up. Well, just go to the website, easiest way to do it. Money management is there, Elliott Wave, and the usual suspects, so to speak. All right, and when we talk about our approach to trading, we use the ART, AL, PTF, TLM, and ERI software on the charts, and you can set those up for scalping, and you can set those up for trend trading. Then underneath that, we have scanners for multiple time frame analysis that look at the 3 different time frames. We got the trade confirmer, the turbo scanner, and the Elliott Wave scanner. So all those are there. And then at the bottom, of course, is our risk control software. So that's kind of the deal with that. All right, so let me come out of here. All right, and if you just showed up, we have a couple people that just showed up. So just a couple quick announcements. Next week, don't forget the client support is going to be at 3 p.m. Pacific time, and we will send out an email. So we're changing the time. It's still going to be every week, still going to be on Wednesdays, but we're changing the time. All right, before I talk about any of the charts and questions, feel free now to type in any questions, and I'll get to those. I'm going to cover a little bit on some of the skills you're going to need to be what they call a CPT trader. Does anybody know what a CPT trader is? Have you ever heard of that term? CPT, I'll put it up here. I'll put it right here. CPT. That's right, consistently profitable trader. Very good, John. Okay, so this is the goal, all right, of what we want to do here. What are some of the elements that get us to this goal? Anybody? Okay, an edge. Good. Okay, so let's kind of do this maybe. Why don't we kind of we'll do this. We'll call this the edge. And I'm writing this freehand, so forgive my messy writing if I screw up any of this. Okay, so there's the edge, okay? So that's your edge. And what is an edge? We're going to talk a little bit about that in a minute. But okay, so an edge is something, right, that gives you a profit over a large sample size of trade. So it's consistent, right? So that's part of your edge. Your edge is your rules, okay? So those are your rules, right? Okay, so what's the next thing that comes into play here? Risk management, right? Okay, good. These are supposed to be risk, and they're supposed to be circles, so excuse my egg-shaped things. Risk management, good. Okay, what else? What else? Psychology, right? So let's draw another one. You got to be able to trade the damn thing, right? So I'll put just PSY, psychology, not physics, but psychology. All right, notice how they overlap because of the fact you need an edge, you need psychology, and you need risk management in order to be a consistently profitable trader. Now, let's break down the edge a little bit. Let's talk about the edge. So when we talk about the edge, and I'm going to erase this, let's just call this the edge. And it all starts with the edge. I don't care how many monitors you have. I don't care how many computers you have. I don't care how much money you got. I don't care what fanciness you bring to the table, what education. If you don't have an edge, you have nothing. Absolutely nothing. Okay, you have to have an edge. And this is got to be something you can trade. You know, if you're waiting for a black swan event, you may be waiting years, okay? If that's your edge, okay, well, that's one style of doing it, but I would consider that a very long-term situation. And if you're trying to make a living from this, good luck, okay? You'd have to really have enough staying power to make it to the next black swan event. All right, but it could be an edge, okay? When we talk about day trading, all right, the edge, all right, has a lot more meaning in terms of having to determine how you're going to make money within one day, all right, because you have to close your positions out in a day. So that edge or set of trading rules is going to be different than if you're a position trader, okay, in terms of how you're going to play a longer term trade where you hold it overnight. So one of the things we're going to talk about, all right, during our tutorial coming up here in Arizona this fall is basically determining the types of edges for the types of trader you are. And then I'm going to share with you during that tutorial what I have found work best for day trading, including things like volume profiles and all that kind of good stuff. How to use the art reversals, maybe candlesticks. All right, so all that kind of stuff. All right. Now, for you personally, as you develop your edge, you're going to have to roll up your sleeves and you're going to have to create a set of rules and test them and test them and test them. And then whatever doesn't work or whatever you like, all right, you either add to them and then retest, delete some things, retest. And the idea is that it's a process where I want you to enjoy the process and not worry so much about the money, okay? If you can get the edge to a satisfactory performance level, then you've got something and the money will come. So that's really important. And, you know, when you're talking about an edge, you're talking about a couple of different things, all right? You may have several setups when looking at your edge. What could be one of them? Candlesticks, okay, I'll put CS. What could be another one? Fibs. What could be another one? Elliott wave. What could be another one? Volume profile, all right. That's for scalpers more likely. I'll put volume P. All right, the bottom line is that depending on your style and what you're comfortable with, how many hours you want to devote to trading, if you're a day trader and things of that nature, that's going to determine which one of these components you may want to use, okay? Or you may want to use a combination of all four. Again, that's something you're going to have to put together as your edge. You know, my edge may not be exactly what interests you, all right? So you have to see, okay? Now, while you're testing, you're going to notice a few things, okay? So I'm just going to put a box around this because there's even more possibilities. I mean, you could use the art reversals, okay? Of course, it was kind of a given. Some people may even want to use the pyramids, okay? So for prop accounts, make sure if you use the pyramids, you do it on the large accounts because they have drawdown, a little bit more intraday drawdown while they're unfolding, okay? So, you know, how you're gonna mix and match these is gonna be up to you, all right? That's the hard work. However, when you start to approach this, you're gonna find a couple things. You're gonna have different times that you use some of these things, and some of them are going to be really good, and some of them are going to be okay, and some of them are going to be just bad, all right? So the really good ones we'll call the A+ trades, okay? The marginal trades we'll call the B trades. And then, you know, you got C or D, and we'll call these trades D, and the ones that just fail most of the time are the Fs. So you're obviously not going to use the Fs, right? But as you trade, and here's where psychology comes in, you're going to see different trade types. We'll call these trade types, which is the types here. You're going to have different setups appear before you. You're going to have A+ trades, you're going to have B trades, and you're going to have D trades. Now, the A+ trades, you're going to have to wait longer for these setups, so it takes time. The B trades will happen more frequently, but they won't be as profitable as the A+ trades on a frequency basis. And the D trades are kind of like gambling, okay? The slot machine. Now, if you're using just price patterns on the chart, let's say candlesticks and nothing else, and you're finding that you're winning as much as losing, it's a lot of work, you're missing some, you know, trades, you're getting in and then getting stopped out a lot. So you're trading a lot, the frequency is high, but the outcome isn't that great. It's almost like a slot machine, you know, pulling the lever on the slot machine. So you kind of don't want to take those, do you? But why do you? Why do you take a D trade? Why do people do that? Because they're bored. They need to feel like they're doing something, okay? And or they've had a couple losing trades and now they're trying to get even with the market. So anything that shows up as a possibility, they take. Don't take the D trades. Get rid of the D trades. However, if you're like candlesticks, but you're also using it with fib retracements or some type of trend analysis as well, then you may find that you're right more often than wrong, and now you got a B trade. Okay. So now you got a B trade. B trades win more often than lose, but they don't win that well. Okay. But you're profitable. You're probably a little bit profitable. And sometimes they're a lot of work because you're not filtering the trades out quite enough. Now the A+ trades. These are the ones that jump out at you and hit you over the head when you see them. They don't happen all the time, but they happen enough during a 2-hour period to keep you fairly active. And it can be a combination of different things. You could use fibs along with candlesticks or art reversals or volume profile and how you combine those. You could even use various different types of charts. For example, range charts can be good if you put an EMA on there. And if you go into a scalp trade, when the range chart crosses an EMA, you get out. That can be one way of doing it. Or you could use volume profile. And when you see a clunk of volume up at a certain profit level, then you need to put, then, you know, if you're scalping using the volume profile, you put your stop right under that. Okay, so there are many different ways to skin the cat. You've got to find the right way for you. You know, my father told me, gave me a quote one time, which I think is pretty good. We're all trying to get to the home port, but every one of us has got to steer the boat ourselves. Okay, you've got to, your course is going to be different, slightly different than somebody else's, but the goal is to get to the home port. Some people will do it in a straight line, others will zigzag, but you don't want to sink, right? You want to get to the home port. So don't worry about your course so much. as your desire to get to the home port, okay? In other words, don't give up. Keep at it until you have an edge you can trade. You will not win every trade, even in the A+ setups. But statistically, your A+ are going to be very high win rate, all right, and nice profitability, and also a controlled environment. In other words, you see it, you trade it, you know it has a positive outcome more often than not. Your job through psychology is going to be to stay out of even B trades and below. And that's not easy, because what happens is when you have a loss, it's human nature to want to get that money back, right? And so therefore you start to become impulsive, and you're not patient, and a B trade comes along and you just take it, or even a D trade. Try to resist that impulse. Stick with the A+ trades. And the A+ trades are not like black swan events. And I'm not talking about something where you have to wait an hour or two for it to set up. So sometimes it has to, but if you trade the first 2 hours in the morning and you're looking for your A+ trade setup, you'll see them, trust me, and you'll be done in 2 hours. For example, I've already made $300 this morning on 4 quick scalp trades. All right, multiply that by 20 accounts, and that's all I need to do. Now I can go out and do some other things. If I wanted to trade more, I could. So you got to figure out how to steer your ship to your own home port, whatever that is. So when you're developing your edge, focus on taking A+ trades only. And try it. Do this in a simulator. You have nothing to lose. Or get an Apex account and do it in their evaluation account. See how you do. If you blow out the evaluation account, you can either have it reset for a fee, or you just wait until the next month when the subscription comes due and they automatically reset it for you. I look at the evaluation accounts in these prop firms as a fancy simulator, but they do give you free data, so I think it's worth the fee for most people. But don't forget it, that's for futures and day trading only. It's not for position trading. However, all right, you can practice position trading on the intraday time frames and work on getting your edge down quicker by having more trades more frequently than if you're just using a daily time frame, so to speak. So that's kind of what I wanted to cover today. Are any questions on this? Risk management, right. Okay, Dave, we didn't. So the risk management is all part of this as well. So if you remember when I drew psychology, I drew the risk management and so forth. And so the idea here under risk management is that creates your formula in your edge. So if you're winning, 60% of the time, all right, and you have a 1-to-1 risk to reward, you're still going to be, profitable, but you kind of want to do better than that. If you're scalp trading, your win percentage is going to be much higher, like 80%, sometimes 90, if you're really good at it. And you're losing very little when you lose, and that's how you make your money, okay? Because at that particular point, you only need a 1-to-1 risk to reward. If you're winning 80% of the time, you're doing pretty well, right? And if you wait for your A+ trades that produce those kind of returns, that's great. But if you screw up your A+ trades and start mixing them with your B's and D's, then your win percentages are going to go way down, right? And if your risk to reward is still only at 1-to-1, well, your profits are going to start to fall off. Anything else? What else? Now, if you're not a day trader, this still applies to you because you still need an edge. And again, there's A+ day trade position trades as well. And you can search for those with the scanners and then see what the setups are on the individual charts. And my A+ trades may be slightly different than yours, but as long as your testing yields great results of an A+ that an A+ trade should deliver, then you're fine. You're fine, I'm fine with my edge, you're fine with your edge. All right, so I think it's good to cover this stuff because I think there's times when we get lost and realize that it all comes down to the edge, and the edge is hard work. And that's why so many people fail. They get sucked into taking the D trades, the gambling trades. And a lot of, if you rely on maybe just candlesticks alone, all right, you may not do as well. And there's A+, by the way, candlestick setups, and there's B candlestick setups. So that applies to any of the individual types of tools you're using. So, but if you look at A+ candlestick setups, combine it with maybe fibs, combine it with the trend or your range band or your trending, combine it maybe with the art reversals, you can turn some of those into A+ trades because the probabilities increase, right? All right, so that's what I wanted to cover today. I don't see any other questions today. Thank you for your feedback, by the way. Good questions that came in earlier. And we'll be back again next week, but don't forget, next week, client support is going to be in the afternoon. So it's going to be, once again, 3 p.m. Pacific time on Wednesdays. So we're moving it from the morning to the afternoon. All right, everybody, thanks for coming. We'll have this posted on the YouTube special area that you can access through the client support. And you guys have a great week. And here we go into August already. All right, so have a good one, and thanks so much. Bye-bye.